CPI came in at 7.1, which is a lot better than people were expecting. Does that mean the markets are going to rally? Is the Fed going to pivot tomorrow?
Expects the Fed to take a hawkish tone to reverse some of the market's end of the year enthusiasm.
Is the housing market going to turn around and take off? Or is this just the calm before the storm? Welcome to the Good News Real Estate channel, where we talk about real, honest, data-driven events here in Boise and beyond. First, we're going to talk about Jerome Powell and how he's flip-flopped from course in the past. Second, we're going to look at what has he been saying so far this year. Third, we're going to look at how have the markets been responding based on the CPI report coming out this morning at 7.1. Lastly, we're going to look at what does this mean for the future for you and me, and what should we be listening for in Jerome Powell's press conference tomorrow. Let's take a brief history lesson. Jerome Powell took the chair role back in 2018 following Yellen.
We interrupt to take you to the White House, where President Trump is about to nominate Federal Reserve Board member Jerome Powell to replace Janet Yellen.
And Yellen was increasing the interest rates, federal fund rate. And Jerome Powell, when he took the chair role, he continued that hawkish stance until about 2019, when the president was giving him pressure, when the Chinese tariffs was creating this trade tension. He decided, wow, he has to flip and start cutting rates instead of increasing them like he previously was doing.
Less than favorable in about some of your decisions.
And what does this mean? This means that Jerome Powell has pivoted midstream, of course, and he could even do that now. But we'll get more into that later. Let's jump back to November's press conference, where he stated a lot of things. He came out multiple times saying that they are going to be ongoing rate increases. They may slow down, but they're going to continue raise the rates. And he didn't say that once or twice. He said that multiple times, that he was going to continue to raise rates. So he wants to see the growth of inflation come down steadily over not just 1 month, not just 2 months, but he wants to see a sustained decline in inflation. Really interesting about that press conference is he's not even putting all his weight on inflation. He also wants to look at wages. He wants to look at job growth, and he wants to see that there's less vacant jobs, higher unemployment, so the wage growth comes down, because remember, the labor market helps increase inflation. And so he wants to see that come down, and he's not putting all his weight on the CPI report. He's also looking at how strong is the job market, how strong is the wage increases. If you think that the Fed is going to turn dovish, like this video. But if you think the Fed is going to turn hawkish, like this video. Either way, we want you to leave your comments below and let us know what you think is going to happen tomorrow. So the other thing he said in that press conference is they are going to have to increase rates higher than what was expected back in September. Now, back in September, they believed that they were going to be at 4.5% in 2023. So if he believes that they got to raise it higher than that, we have a lot more rate increases coming, and there's no pivot anytime soon. Actually, go into the CPI report, see what it says. Right here, like we said, that the CPI report came at 7.1, which was a lot better than what we expected. The other thing that we're seeing is that the home shelter, right here, when it goes into the breakdown, is on a decline. So all things as far as shelter is on a decline. Those are two of the things that the Fed wants to see. The third thing that we won't know yet is if the wages are coming down. So that's something that we need to watch and we need to be prepared for. With that being said, let's see how are the markets reacting? How are the markets reacting to this report coming out? And what we can see is that the markets are kind of like, they don't know what they think. This morning they shot up, and then now they're shooting back down and they're widening around. So this is the Dow, S&P 500, kind of same thing. It shot up, shot down, and now it's kind of on the rise. We even got this morning a report that interest rates here locally from one of the lenders that we use, that he was able to get clients interest rate under the fives. He was like, yes, we're back in the fives. That's kind of how the markets are reacting to this CPI report. But what does that mean? And what does that mean? And what should we be paying attention to tomorrow's press conference? All right, guys, let's jump into this Wall Street Journal by Nicky Links, or commonly known as Nicky Links. What he says. So he's saying that the Federal Reserve is on track to the 5% increase tomorrow. So 50 basis point increase tomorrow. But what he also says is because of the inflation numbers coming down 2 months in a row, that there is going to be a higher debate on whether or not the 50 basis points that the Fed chair has been talking about is going to continue going on to 2023. He goes on further and he says that one camp of the dove policy, so the dovish people who think that, okay, the Fed's going to lighten their load, is if we continue to see this inflationary decrease, the Fed might actually not do 50 basis points back in their next meeting in February, but maybe 25 or maybe a 0, or maybe they're going to wait and see in the next 3 months to see how the rate increases go. But on the hawkish side, this inflation is going to jump right back up next month, and we're still 5% above the 2% inflationary period that Jerome Powell wants us to be at. So they don't think that the Fed's going to do a U-turn anytime soon. But again, what do you think? We want to know what you think. We want to know what your thoughts are. What should we be listening for tomorrow? Signs of Jerome Powell staying hawkish is if he comes out and he says, hey, we're going to stay the course. We're staying the course. We're going to continue doing the interest rate increases like what he said a couple months ago. If he comes out and he says, we got a lot of work to do still. The job market is still too strong. So if these things he's saying, and if the job report that comes out later on this week is still too strong, then we could still see a very hawkish stance from the Fed. If he comes out and he says, hey, we're going to wait and see. We're going to wait and see how these Fed, well, there's a chance they're showing signs that he is doving and he's going to pivot and do a U-turn. What we ended up doing too is we went back and we listened to his press conference back in June of 2019, the press conference right before he started cutting interest rates, right before he did the U-turn and pivoted. The thing that he said is, hey, we're going to watch and see if the risk of staying with these high rates is going to be too high. Yeah, a Fed pause or a Fed cut could be appropriate. So those are two statements that he said in that press conference, that if he says tomorrow, there could be a chance that coming February 1st, we're going to see the Fed do a pivot. All of these things being said, we want to make sure you know, and I remind you of, real estate market is not just a click of a button and you sold your house, or a click of a button and you bought a house. It is a long-term thing. If the Feds continue to raise rates, then we're going to see prices continually to decline. If they end up doing a U-turn in the first quarter of 2023, well, then we could see a bunch of investors getting off the sideline and starting putting their money back into real estate because they see that the Fed is pivoting and dropping rates, which is going to drop the interest rates. If the Fed does turn dovish, investors are probably going to get back into the housing market and interest rates will start dropping again, which is going to create this mass rush of buyers jumping back into the market. But if the Fed stays hawkish, prices are probably continually going to go down because affordability is just not there. People's savings are getting eaten up. We've talked about that many times in this channel before, and interest rates are going to start going back up.